Hello, traders. FX Pip Collector here. Today is Wednesday, February 19th, and this is my morning video where we take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community, linked at the end of this video down in the corner and in the description. If you would like to check out my membership, you do so at my website, fxpipcollector.com. Get you access to all the benefits listed below and more. So, anyways, I always like to start off by looking at the news calendar so that everybody can be aware of what the news is for the day. Now, Donald Trump is not on the news calendar yet, but it seems like by afternoon, pretty much every single day, you will see Donald Trump on the news calendar. So, keep an eye out for him, definitely. But besides that, really, it's all about the FOMC meeting minutes today. It's actually not even in the New York session, it's actually late in the New York session. 7 p.m. UK time or 2 p.m. Eastern Standard Time. Now, keep in mind that this is notes, and these notes from the last FOMC meeting could be, many, many pages long. So if the news comes out at 7 o'clock, it may take, 15, 20 minutes or more for the market to digest what the notes say. So don't expect it's just going to take right off at 7 o'clock. It might take a little while for it to digest the move. And then this evening, we also had some Kiwi news. There's a lot of actual news in the Asian session this week. So if you are available during that time, it might be a good time to be looking for some trades. Anyways, let's start off by looking at the US dollar index. Now, hopefully on the US dollar index, we have ended a wave B, and hopefully we're going to, on this daily time frame, make a downtrend that is going to be very impulsive, making lower lows, lower highs for a big old giant wave C to finish off this A, B, and C correction. Now, the only problem I'm having with this pattern is that this move down still could possibly be a correction to this last wave up. This could definitely make another higher low, and go up again before it really makes the real turn. There's really still no proof for sure that the dollar is going to keep trending down. If the dollar index does turn up, then you would expect to see the exact same move on every single one of these dollar pairs, except for obviously on the euro dollar, pound dollar, Aussie dollar, Kiwi dollar would be down. US dollar CAD, US dollar Swiss, it potentially would be up. I still think that it's more likely the way B is over, and it's more likely it's just going to keep on going down, but we have to keep all possibilities in mind. So let's start off on the euro dollar. The euro dollar has turned down pretty significantly on the daily time frame. So now I have my Fibonacci retracement on this move right here. Now that we've turned down, there's only two things that can happen. Option number one is that we're going to make a correction to this last wave up. We're going to go down to a Fibonacci level, and then we're going to continue the uptrend, which is what I'm hoping for. Option number two is that this right here really is like the end of like possibly an ABC, and that this is actually just going to keep on trending down. Definitely, both possibilities are likely. If you go down to the 8 hour time frame, we definitely have a break of structure, so I would be looking for shorts on shorter time frames. So going down to the 1 hour time frame, I would recommend looking for shorts, but like I said, I would keep in mind that this move down could be a correction to this move up. So if you see any kind of corrective pattern down to a Fibonacci level with a big turn, keep in mind that it could continue the uptrend. This move down looks like a trend to me, and if it keeps on trending like this, as in no break of structure to the upside, then you definitely would just keep on looking for shorts. If it does decide to, go down to a Fibonacci level with some sort of a three-way pattern, some sort of an A, B, and a C shape, then give you a nice Fibonacci bounce, nice break of structure, then you'll know that that's an ABC correction to the last wave up, and you'll be ready to start looking for longs again in the continuation for the uptrend. Right now, if you trade the shorter time frames, I would recommend looking for shorts, and I would only be looking for shorts at the end of pullbacks. So I wouldn't be trying to go short right now. So, anyways, moving on to the pound dollar. Pound dollar definitely has a broken structure down, but just like the other dollar pairs, I would kind of expect to see a little bit of a bigger push down. Just like the euro dollar, there's actually two options. Option number one is we make a correction to this last wave up. It goes down to a percentage of that wave and then continues the uptrend. Option number two is that this actually is a trend reversal and it just keeps going down. Either option, once you get that break of structure confirming the move to the downside, I would throw my Fibonacci retracement on there. And I would look for shorts on shorter time frames until the market proves that it's either a correction to the uptrend or that it's a trend reversal with very impulsive movements to the downside. So taking it down to the 1 hour time frame, we have not broken structure to the downside on the pound dollar yet. For me, the breaker structure is this line right here. So I would be a little bit cautious. I mean, there's always a chance that it either rejects structure and just keeps on going up, or it makes a little bit of a higher low and just keeps on going up. Until we actually get the breaker structure, we have to be very cautious about going short. If and when it does break structure, the first thing I would do is actually zoom out a little bit and I would throw my Fibonacci retracement from the low all the way up to the high, and I would observe the market to see if it made a three-way pullback, a corrective pattern, like an ABC, WXY, or some sort of a flat, or I would observe to see if it just made a very impulsive lower lows, lower highs. Either way, once we get that breaker structure, you could comfortably be looking for shorts at shorter time frames. No breaker structure means be very cautious about shorts. So let's move on to the Aussie dollar. Aussie dollar, kind of the same deal. I mean, all the dollar pairs are kind of respecting a Fibonacci level. Most of the dollar pairs have not broken down yet, so we can't really say 100% for sure. But if and when they do break down, I would throw my Fibonacci on there, and just like the other pairs, I would observe it to see if it made a corrective pattern down and then continued up, or whether it made a very impulsive pattern down. I'm definitely thinking it's probably going to be corrective, but you never know. And once we get that breaker structure, we can look for shorts. Now, moving on to the 1 hour time frame, there's technically no breaker structure. I mean, it did break structure, but it's kind of a rejection of structure. Kind of almost looks like this could be like a wave A, this could be a wave B, and maybe it will go down, maybe it will break structure, but it's actually a wave C to the uptrend. If and when it does break and hold structure, the first thing I would do is throw my Fibonacci from the very low to the very high, Fibonacci retracement, and I would observe the market to see if you observe three waves down to a Fibonacci level with an impulsive turn to the upside, or I would observe to see if it makes a very impulsive downtrend, making lower lows, lower highs. Till we get that break and hold below structure, I would definitely be a little cautious about my shorts because there's always a chance it could make a higher low and just keep on going up. For me personally, I do only trade in one direction until I see confirmation. And for me, you don't really get confirmation until you break and hold below this structure level right here on at least a 1 hour time frame. So be very cautious about your shorts as of now. Kiwi dollar, I really don't cover it that much because it's exactly the same as the Aussie dollar. Same type of thing. Either we're going to be in a crutch into this move up, or we're going to be in some sort of a trend reversal. More than likely, it is a crutch in. Exact same analysis as the Aussie dollar. So moving on to the US dollar CAD. US dollar CAD, we have a very nice breaker structure. And most likely what is going to happen over the next few is this is going to make a breaker structure pullback. And then later on, we're going to get a nice sorting opportunity. But this is the daily time frame. So it may actually even end up being like next week or something when we get this big sort. So now I would say there's a pretty good chance because we are making higher highs, higher lows on the sort of time frames. We do have a breaker structure on the sort of time frames. There's a very good chance that now we're making a correction to the last wave down. I would expect this correction to go probably minimum to 38, probably could go up to the 78% or maybe even a little bit higher. So I think if you are trading the short time frames, you could definitely be looking for longs right now. And just like the other pairs, you're going to have to observe it to see if it makes an impulsive uptrend or whether it makes a very corrective overlapping pattern like a correction, like an ABC, WXY, or some sort of a flat. Either way, if you do trade the very short time frames, you could be looking for longs. Now that we have a breaker structure, watch your Fibonacci levels, watch your structure levels, watch for big Fibonacci bounces, and hopefully you'll be trading in the right direction. Just keep in mind that this move up is likely a correction to the last wave down. So moving on to the US dollar Swiss. US dollar Swiss is kind of all over the place a little bit. I mean, honestly, this is definitely a downtrend, but then this is impulsive and then it made three waves down. Almost kind of makes you think like it possibly could even go up and, test this area that I've been saying that it should do. Because most wave A's, wave ones do, take out structure from the previous trend, which it definitely has not done yet. But just like the other pairs, we have to keep in mind that it could be a correction to this last wave down. It could make some sort of a corrective pattern up to a fib level and continue the downtrend. So just like the other pairs, we either in a trend reversal that's going to keep going up, or we are in a corrective pattern to the last wave down. It's going to go to a fib level and give us an entry to go short. Either direction, we could be looking for longs while we learn and hopefully earn, whether it's a correction or whether it's a trend. So down on the 1 hour time frame, we have our Fibonacci retracement on the last move down, which is actually a very, very beautiful five-wave downtrend. So now what we are doing is we observe the market to see if it makes a very impulsive moves up with no break of structure, or whether we see some sort of a corrective pattern. Maybe it makes some sort of an ABC up to a Fibonacci level and then gives you a big impulsive turn with a break of structure. Either way, you could be looking for longs on these sort of time frames where hopefully you learn whether it's an ABC correction, WXY, or some sort of a correction to this last wave down, or whether it's a very impulsive trend that never breaks structure and never gives you a reversal to the downside. Either way, hopefully you can learn and earn while you're looking for longs. So moving on to gold. Gold smashed through all these Fibonacci levels. If you've been following along with my videos, you know that basically ever since way down here, I've been recommending to do nothing whatsoever but look for longs on gold. Gold is in an uptrend on the monthly, uptrend on the weekly, uptrend on the daily, uptrend on the 4 hour time frame. So if you are on these sort of time frames thinking that it's a good idea to go short, then honestly you kind of deserve to lose money in the market. I have been recommending for many weeks now to do nothing but look for longs. My new target is the 261.8, right around the $3,000 an ounce area. And that doesn't mean that I'm going to go short at that area. That just means that I'm going to watch out for a possible reversal at that area. If it doesn't give me a reversal at that area, then I would just keep on looking for longs. Because when every single higher time frame is in an uptrend, going down to the sort of time frames and looking for shorts is a recipe for disaster. Going down to the 1 hour time frame, I definitely would be looking for longs. I definitely wouldn't try to go long now. I would be trying to go long on these pullbacks that we keep seeing. These 1, 2, 3 way pullbacks. 1, 2, 3 way pullbacks. So I definitely wouldn't go long now. If it does start to push down, I would not go short either. I would be waiting patiently for a 3 way pullback. It really doesn't even have to make a nice 3 way pullback like this, which is why I would not recommend going short. It potentially could just make a little teeny pullback and just keep on trending up. I would be doing nothing but holding on to longs, looking for longs. I would ignore any move to the downside as nothing more than just a correction to the uptrend. Like I said, when the monthly, weekly, daily, 4 hour, and every single time frame in between is in an uptrend, going down to this sort of time frame and thinking that it's a good idea to go short is a recipe for disaster. So the trend is your friend. So let's take it to the US dollar yen. US dollar yen and all the other yen pairs, I'm still kind of thinking that there's a very good chance that we're in a big wave C to the downside that on the daily will make lower lows, lower highs over the coming weeks and probably months. So I am definitely looking for shorts unless we get a big break to the upside, which we definitely do not have. Going down to the 1 hour time frame, I got my Fibonacci retracement on this last move down. It does definitely look to me like an A and a B. It definitely looks to me like it could go up to one of these higher fib levels for a wave C. And you could try to trade that move, but if you try to trade against the trend, you have to realize that even though it looks like it could do something like this, it possibly could just do this also and just dive right down because the trend is active. So if you do decide to go long, just keep a very close eye on it. I do think that it's likely it will go up to a fib level, but I definitely am not taking that trade. But instead, I'm waiting for shorts at the end of 3 way pullbacks for the continuation of the downtrend. So moving on to the euro yen. All the yen pairs, I think, are doing the same thing, which is possibly going down for a wave C of wave 4. So I am very bearish on all of the yen pairs, and not just the euro yen, pound yen, dollar yen, but all of them. And I would be looking for shorts on every single one of them unless we get a big break to the upside, that is. So going down to the 1 hour time frame. Now this move up right here is very impulsive, but I think there's a good chance this is like a motive wave correction looking at all the other yen pairs. Now if you do get a fib bounce with a break of structure, then okay, start looking for longs. But otherwise, I would definitely be looking for shorts at the end of every single one of these pullbacks. It might just go down, bounce from a fib level, not break structure, bounce, not break structure, and just keep on going. Unless you get a fib bounce, unless you get a break of structure, I would definitely recommend looking for shorts on all these sort of time frames. So let's move on to the pound yen. This is exactly the same strategy as all the other yen pairs. I think we are going down for a big wave C of wave 4. If it does break structure to the upside, proving me wrong, that's fine by me. I have no problem changing my direction and looking for longs. But right now, I am short all the way on every single yen pair until the market tells me otherwise. with a breaker structure to the upside. So going down to the 1 hour time frame, I'm definitely looking for sorts. Look at this three-way pullback. One, two, three ways up. Look at this three-way pullback. One, two, three ways up. Now this move up right here is very impulsive, which makes you think that this move down would be corrective and it would go back up again. But looking at all the yen pairs, especially the JPY basket, I'm pretty bearish. Well, I'm bullish on the JPY basket, bearish on the JPY pairs. This literally could just keep on going down and down and down and down. I would be looking for shorts at the end of every pullback I see. If we get some sort of a fib bounce, if we get some sort of a breaker structure, maybe you can justify going long, but even then, I would not really recommend it unless we get a higher time frame break. I would be looking for shorts at the end of three-way pullbacks, especially on these sort of time frames, until higher roadmap time frames told us otherwise, which they definitely have not done so yet. So, anyways, don't forget to join my free Discord trading community. And as always, thank you for watching and happy trading to everyone.